The market is always going from contraction phase to contraction phase and to the next contraction phase, as you see here, me drawing. And this is exactly what happens here also. You can find here tiny contraction phases, the market pushes out. Not drawing in these contraction phases or considering them is very important because the market will come back eventually, as you see here, and then pushes out again. And then you find always on the bottom side, like these smaller contraction phases, what we're going to talk about in this video on how you can identify in what direction the market goes. And this will make your trading way more easier because every time the market pushes out and has a contraction phase, as you see here, the market most likely want to come back. So when just looking at it on another perspective, either we trade to these contraction phases, or we make sure that once the market comes in these contraction phases, now how can we buy here to get the continuation movement up? There's a 3-step method that I want to give to you in this video. And it is literally to understand first of all where the market wants to go to. Either it goes always to bigger structure highs or lows. The bigger structure highs, for example, exactly this high that you see here, or even this high here. And a bigger structure low is just like down here. So maybe you're thinking, oh, wait a moment, this is extremely far away. And yes, this is what the market will reach very often. The gray area here is the US session time, and the market on the US market, this is the S&P 500 futures, the 500 biggest American companies. The market is aiming for bigger structure lows. Check this out. You can see a bigger structure low and you can see here a bigger structure high. The session started here where my mouse is. And you see that it is more near or more clear that the market wants to go down here than up here. I will show you a second example. You can see here bigger structure low, for example, and here bigger structure high. Now the session time started here, for example, so this is where we start trading. Makes more sense that the market goes up. Now the market pushes down and then we can see that it makes more sense trading down here. So now you understood where the market wants to go. If you never did this, by the way, and you seem used to struggle that, then do this. I hope you can see the solution and the problem right now that I'm giving you here, that you can really become a better trader. The second one is that you want to identify what we just did, like is the market more near at the high or at the low? Like if we see that the market does this movement up, very often the market does the same movement up. A very extreme example is if you can see the market breaks out with a lot of green candles and does 3 small green candles, such as from here to there. Within the next 3 to 5 minutes, the market will do around the same movement as you see there. Because a green candle opens always on the bottom, closes on the top. And if you see like an indicator for yourself that within 1 minute, a green candle means the market was going higher. So it means if you see 3 green candles, it means within 3 minutes the market was going up. To expect that the market will go within the next 3 minutes, again higher at least, is very realistic to do the same movement also. So it's also, this is like you are the best indicators, what I want to tell. And if you just like look at it a bit more with the bigger movements, what the market does, if you see a movement from here to there, it takes maybe like 15 minutes. Then expect that the market the next 15 minutes will do the same movement if it's going up. For example, check this out. The market here, it's almost the same amount of candles as you can see within the movement. Sadly, not the same length, but around the same amount of candles, and that the market did a maximum movement up. And this is something what is very important. You see here how the market is aiming for this bigger structure high here, and then has troubles to go more higher. And you can identify that. This is step number 2, what we're talking about already, is that is the market right now more flat in a contraction phase? You can see here it's flat, or is it extremely trending up? There are days the market is more trending than here, such as, for example, here trending down. And there are days where the market is more in a contraction phase, as you see there. And to consider that the market is always rotating and not just running in one movement, what I want to tell you is that the market has always a movement up and down, and again up and again down. And then either the movement down is more longer than the movements up, then of course we have a downtrend, or it's the opposite, that the movement up is more longer, as you saw here in my first drawn example. So in this case here, you see on step number 2 how the market is doing the same length of retracements, it's being called. If you assume that there is an uptrend, the movements down are retracements. So you see from here to there is a movement back. And then you see from here to there, there's also a movement back. Then the market starts to shoot up. Now check this out. The movement here, the retracement has almost the same length here, has almost the same length here, that the market starts to continue going up. So the market does also the same movement up as you can see here from bottom to top. From bottom to top, if you can see that it has this length, because if you can see the market did this kind of movement up, and you assume here that the market goes up within any means, then making sure that in step number 1 was this high, that it's realistic now that the market reaches this high. If that's the case, and you can see because the market did this kind of movement and it could do the same move again, we're not aiming here for where my mouse is, we're aiming for this high, the next structure. And step number 3 is if we identify that this is a movement that we can foresee or expect with our experience on the market, then step number 3 is if I can see here from down here to up here, in this case it's a $1,725 movement with a specific position size. In this case it's a $500 movement or $600 movement. Then how can I get most of it out of this $500 movement? And what I really love is that if I can see the market does a lot of green candles, and I can see they are tiny using a 1-minute chart, then understand that the green candles opens on the bottom, it closes on the top. And when it's very tiny, I love to enter the trade where the green candle is closing, right here where you see the X, because the small green candle closes here. The stop placement is here where my mouse is, under the green candle. That means if I adjust $100 or one position size for my trading, in this case those are $62, and aim for this bigger structure high as I just showed you, we have a risk reward ratio of around almost 5. That's 4.5, as you can see here, 4.4. That means when using here $125, because it's a future market, position size 1 is the minimum, position size 2 is the second largest, it's $125 for this trade. And if the market reaches the destination, it means I made $550 for this trade. And this is something what is very important when it comes to trading, to understand that the strategy means this is how I read the market, this is how I enter the market, and I'm only allowed to have 2 trades a day that are going to lose in a row. If one of these trades is going to hit $500, I have 5 more trades for the day, because each trade should be adjusted to $100. This is something what is very important, and I hope this makes you a better trader. So when it comes to in terms of reading again, biggest structure high you see here, the very biggest structure high, the very biggest structure low you see there. You see how the market went already to the biggest structure low, so that the market goes to the biggest structure high makes more sense, because what doesn't go down here will go up there. And if you see that the market starts to make the same retracement, start measuring them. Start to look forward how big of the retracements are, as you see here. And that should prevent you from trading up here. It should make you more, it should help you more to trade down here, using here this green candle, for example. And as you see here, when just using this green candle here, adjusting here $100 and having the stop placement where the green candle closes the trade, the stop placement under the green candle, and aiming for this bigger structure high gives us a risk reward of 6. And you see here adjusted is $100, and the winning trade is here $600. I would love to show you something from my training students. It's in the group that we use, and this is something what is very important. It is to see winning trades, so many as possible. For example, we have here something from Anwar. And you can see here that he sees that the market does a retracement to the 1-day VWAP here, and then he expects the market goes up. This is very important when it comes to reading, because the step number 1 is he identified here's this high, here's this low, and it makes more sense for him that the market goes up. But because the market is a bit more wiggling around, he assumes the market goes down. So now the next thing is when he's now starting to trade, when he's now looking at the future that he cannot see, like he's sitting down, he's looking what the market is doing, and he has the expectation that the market goes down here to the 1-day VWAP. and then also that the market goes up. Then the question is, when he's not trading, can he see trading down to this 1-day VWAP, or can he see, for example, trading up? And on the next picture, you see here how the market was going down here. He didn't saw this trade. For him, it was not nice, but then he saw how the market was going up. And here, as you see here, very tight stop placement and very long take profit placements for a good risk reward. Hope you can take something out of this video. Wish you all love, good trades. JT out.